Hello, thank you so much for joining us. This is Monday's edition of Business Nigeria, broadcasting live from Eko Atlantic, Victoria Island in Lagos. Welcome, thank you for joining us again. These are the top stories we are tracking for you at this time. CBN loans to banks hits 5-year high on liquidity squeeze as Boeing to assist airlines in Nigeria in accessing aircraft insurance coverage. Stock slide, dollar strong as market wonders if Fed is done. And on our show today, our first discussion will stay with Nigeria's economy. For the first segment, we'll take a closer look at some burning economic issues and, of course, forecasts and projections for the year 2025. And later on the show, we would evaluate developments in Nigeria's petroleum industry in a deregulated environment with focus on pricing. Well, let's start with major stories making headlines around the world of business. Now, let's start with the news saying that the Central Bank of Nigeria, that's data from them, reveals that its loan to banks surged to 1.2 trillion naira in the first 7 days of 2025, indicating a liquidity squeeze in the sector. This represents the highest in 5 years and a 961.3% jump from 114.2 billion naira reported in the same period in 2021. Analysts attributed the rising demand for loans to liquidity constraints, monetary policy tightening, economic challenges, and regulatory pressures. Head of Financial Institutions Rating at Augustine Consulting, Mr. Ayokunle Olabumi, explained that the contractionary measures of the CBN have increased the borrowings of the banks from the Apex Bank. Boeing International Corporation says it is ready to assist airlines in Nigeria in accessing adequate aircraft insurance coverage through partnership with Buoyant Lessors and Global Financiers. Boeing Sales Director, African Regional Commercial Airlines, Mr. Moini Bekwe, disclosed this in Dublin, Ireland, during a meeting of the Boeing Lessor Forum. This forum presents a unique opportunity for Nigeria to showcase its reforms in the aviation sector towards forging strategic alliances. According to the Boeing sales director, such efforts will contribute significantly to enabling Nigeria airline operators to mitigate risk. He noted that one of the key aspects of aviation insurance in Nigeria, which requires airline or aircraft operators to maintain adequate insurance and, of course, cover. And he praised Nigeria for securing the first position in Cape Town Convention Compliance Index ratings in Africa. Well, the Chief Executive Officer of CFG Advisory, Mr. Tilewa Adebajo, has emphasized that to revive the economy, the government must prioritize reducing its debt burden, restore its credit ratings to investment grade, and curb inflation. According to Mr. Adebajo, these measures would lower borrowing costs, stimulate investment, and drive sustainable growth, productivity, and employment. He stated this in the CFG's Nigeria's 2025 economic forecast titled From Reform Fatigue Quagmire to Sustainable Growth. He added that the fate of the Naira would hinge on how the government manages its debt profile, boost oil production, and leverages asset sales. Well, let's start the week on Business Nigeria with Mr. Tilewa Adebajo. He's live in the studio for more on this and some more burning economic issues. Good afternoon. It's good to have you join us live in the studio.
Good afternoon, Tolu, and a happy new year to you.
Thank you. I wish you the same. Well, I think we should start with an overview of this report. I read it. It's details, a lot of aspects in it that we'll delve into. But give an overview of this forecast and what message you're really passing out.
Well, I think we all know that we've been through some pretty tough reforms in the last 18 months. So at this time, we're asking ourselves, what is the outcome of these reforms? And once we know the outcome of these reforms, then the question now is that when, will we have SOCA, and what does this year has to offer? And taking a look at the aspects, one of the most devastating impacts that this reform process has had on the economy is the exchange rate. We've witnessed the exchange rate move from about 400 to 1,700. And that has impacted industry, has impacted households, and it has impacted the financial system as a whole. Then, of course, we now know that the subsidy has now been removed, which is one of the This was one of the original goals of the reform process. So now the subsidy has been removed. We do not have the subsidy in the budget for 2025. So there's no allocation for fuel subsidy in the budget of 2025. So clearly, subsidy is gone. But having said that, we still have some significant challenges. The economy is in stagflation, and that's why we titled our report as the reform fatigue. We had gotten into some reform fatigue because the government had put the cart before the horse with its implementation. We had drawn out longer, and the fact that we now have inflation and the economy is in stagflation. And stagflation means high levels of inflation, low levels of growth, and high unemployment. So that is where we find ourselves now. So now we've said we've now been in this quagmire for the last 18 months. So how do we get out of this quagmire? So the report has focused on what has happened in the last 18 months and then the steps that the government must take, because this is the second budget cycle for this new government. It's no longer a new government. It's going into its third budget cycle, but this is the first full budget cycle, because the first budget cycle was a supplementary budget for 6 months. So we need to start assessing the progress has been made with economic reforms and what the challenges are for this year.
What do you think make of the alignment and implementation of some of these policy measures as instituted by this government?
Well, that has been the problem. I haven't seen much of coordination, and that is where we are where we are. I do not believe the foreign exchange should be at 1,700.
How much do you think it should be?
I believe this foreign exchange should be sub 1,000, at least 750 to 800, if the reform process was properly managed. Because certain things were not put in place on time. And right now, the economy is experiencing some tightness with inflation. So, and inflation is one of the biggest problems in any economy because it erodes purchasing power of the households and prices are becoming more increasing. The fuel subsidy removal, we knew was going to have an inflationary impact. I mean, there was no question about that. That we knew all along. So it's a question of how do you manage that inflationary impact? Because of the way they were dragging it, first of all, they increased the price to 500 to 900. So we didn't quite know where the price is. But now that the price has settled, then we can now begin to see that price or that cost push effect of the price, the subsidy removal, now coming through to the economy. Because at a point in time, monetary policy, the inflation trajectory was actually coming downwards. But then with the fuel price, another fuel hike again, went back. The inflation trajectory is going upwards now. And of course, that the monetary policy authorities had to tighten again. So, so hopefully now that we now know where the price levels are, we can now begin to see the system begin to absorb these price shocks so that we do not see any further increases in price, at least for this year, so that we can now begin to see a downward trajectory on inflation this year. So, but that did not quite work out. But right now, I think we have a handle on that now because the subsidy situation has been removed. Same thing with the foreign exchange. And there are things that the government needs to do to ensure that the foreign exchange comes below 1,000.
Interestingly, also in that report, the debt burden issue is something that you talked about, you mentioned, and really it's a reality that's facing us. And debt servicing also in the 2025 budget is something that analysts have been talking about. How does that also come to you moving on in 2025? How does it affect growth and development?
That for me is the biggest red flag now. That is the biggest challenge the Nigerian economy has been facing. We still have about 35 trillion in ways and means financing that we are yet to resolve. And we need to see how that will be reflected when the central bank comes out with its annual report. Because as you know, the central bank cannot accept securitization for repayment for ways and means financing because it's not in line with Section 38 of the CBN Act. So that was being resolved, but now we have these issues with the budget, as you have rightly pointed out. The debt profile has, in December alone, the government went and raised close to $7 billion in debt. That was what we raised in December. So that has taken the debt profile now to probably close to over $100 billion. That's it. So the debt burden is over $100 billion. So if you take a look at it, probably about half of that is foreign debt. Just over half is domestic, and the rest is foreign debt. So those are serious source of concerns as we speak right now. And if you take a look at the 2025 proposed budget, the debt servicing has increased from 8 trillion last year to 16.3 trillion last year. It's doubled. So that is a major source of concern. And to exacerbate that problem, the last 3 years, from 2023, 2024, 2025 budget, the cumulative deficit is now about 37 trillion naira. So that tells you that the debt levels are clearly not sustainable, and that's why we are suggesting the next action that government needs to take to be able to reduce that debt profile.
And that's really very important. Moving on, before we talk about what government needs to prioritize moving forward, are there still opportunities in Nigeria's market?
Yes. Don't forget that, unfortunately, over the last 6 years, Nigeria has lost $300 billion of its GDP. And the GDP for Nigeria is now $199 billion, making Nigeria the fourth largest economy behind South Africa, Egypt, Algeria. So those are the consequences of that, and the devaluation and the stagflation and the productivity. The biggest problem in Nigeria is the output gap. Okay, and the output gap means that the potential of where we should be and where we should be producing in terms of productivity and what we're doing, there's a big gap. So Nigeria should probably be, in terms of productivity, at a particular level, but because of the constraints in our economy, we're producing at a particular level. And some of these constraints, the biggest of it is government debt. Because government debt is also fueling inflation, because money supply has increased to 108 trillion, which is the highest, and money supply went up by 68% in 1 year on year. So that is pretty significant, and that is still what, so it's driving inflation. So, and don't forget that CRR is 50%. So 50% of the deposits have been ring-fenced in the central bank, and the 50% of the other deposit that is also out there, government is also competing, borrowing money with the private sector. So government is now crowding at the private sector in terms of borrowing, which is now impacting growth. So that is why the debt problem is. And so the opportunities in Nigeria are immense in terms of, when you take a look at the earning potentials, a market of 200 million people. But if you say you have 200 million people, but they do not have purchasing power, and their purchasing power has been eroded because of inflation, then what we have created, as you see from the industrial side, from the firms, we now have a sachet economy. Most of the industry, in order to reach the consumers, are producing everything in sachets. Even alcohol is being sold in sachets now. So these are the challenges we have. But in terms of the opportunities in Nigeria, the potential spending for Nigerian households is close to $30 billion, so, which is the size of the current government budget. So the households in Nigeria have a higher spending power than the current government budget. So these are the things that needs to be unleashed. So we see things in agriculture, but our output is really where it is. The output gap is really what is killing Nigeria.
Brilliant stuff. Now, government is saying 15% inflation is the target. CBN, we had inflation targeting even before now, and now government is saying with this budget, how feasible is this looking at it? What I saw in the report, 22% is achievable?
Well, our projections for inflation for this year is 22%.
Okay.
That is our own projections,
yes, for
based on our own analysis. And the reason why we say that is because the Central Bank of Nigeria should be the ones telling us the direction of inflation. With the National Bureau of Statistics, everybody has a basket. You can also measure inflation because you purchase. You know how much you spend on food. If you take a look at your salary, you know where your spending item is more. So that will determine the weighting of the basket of goods you would use. There's an ongoing exercise now to rebase CPI and GDP, and we need to be very careful. Because if we do that, if we look at some of the inflation estimates that we use from Lagos, inflation now is close to 42%. As we speak, if we use the baskets from the increase in prices, you can go there. What is the price from CMS to Ikeja bus stop for transport? You know that. What's the price from CMS bus stop to Oshodi? You can get those prices. Go to the markets and check the prices of rice and all the staples. You can get the inflation numbers yourself. So we need to be very careful when we do this rebasing. So inflation is something that we should leave to the monetary authorities and the statistics authorities, which is the National Bureau of Statistics. Yes, we all desire 15% inflation, because at 15% inflation, the data shows that Nigerian economy grows at low inflation. So the reason why you want inflation to grow is to ensure growth. So if we have low inflation, we can begin to see close to 8 to 10%. But we need to tame inflation first. We need to bring it down properly. And the way government can do that is to reduce its deficit and to be able to reduce money supply.
Interesting. Now, so what should government prioritize moving forward, looking at all that we've identified and all of these issues? It's a two-in-one question for Rabs. And also, what sort of social intervention scheme or initiative or program do you think can help cushion the effect of the fallout of some of these policies 18 months gone?
Well, as you see from our reports, one of the things we pointed out was that we have been quite disappointed because the social intervention programs have failed.
Yeah.
It's been mired in corruption with the minister that was suspended, and since then we haven't heard anything about it. So it's rather unfortunate that the program that was supposed to cushion the effects, it's gone quiet. So I think it's important that social intervention programs are revived to be able to provide the cushion. That's number one. Number two, I think it's important that government, when you have your balance sheet, because if you take a look at the federal government of Nigeria's balance sheet, you might be talking about technical insolvency. So because your current assets, your current assets cannot cover your current liabilities anymore. So that shows that you have significant amounts of challenges. But on the asset side of your balance sheet, you are asset rich. So what we're saying is that the government should sell down its JV assets to be able to spur growth in the oil and gas industry. In that process, it can raise close to $30 to $50 billion. Now, with the $30 to $50 billion it's raising, a lot of people are concerned that they mustn't spend that money onto recurrent. So government needs to, first of all, create certain specific projects. Say, for instance, we'll talk about renovating the Murtala Mohammed Airport. So some of that money should go into upgrading and renovating Murtala Mohammed Airport to world-class standards, or identify key projects that this proceeds should go into. They can take some of it to resolve the debt issue, and the rest of it should be invested in the Nigerian Sovereign the Sovereign Wealth Fund of Nigeria, NSI. We have a stabilization fund in that. So government should also put a lot of money into the stabilization fund of the Sovereign Wealth Fund and continue to build wealth. Because what is happening with that stabilization fund is that the fund is supposed to go and invest money so that when government has a deficit or a financial problem, the stabilization fund of the Sovereign Wealth Fund should be able to support it. Like Norway, for instance, the Norwegian Sovereign Wealth Fund is valued at about 1.5 trillion. And last year, it returned $250 billion in return for the government, which is a lot of money. So we need to get into that so that we can create a buffer and we can create something that will help us finance and manage our fiscal deficits.
Interesting conversation. I must say, I know we can go on and on, but that's our time. I must thank you so much for starting the week with us, Mr. Tilewa Adebajo, CEO, CFG Advisory. Thank you so much for starting the week with us on Business Nigeria. It's good to see you here. Thank you for coming in. Happy New Year again. Thank you. Still to come on the show, we would evaluate developments in Nigeria's petroleum industry, of course, in a deregulated environment. And I have the Southwest Zonal Chairman of Independent Petroleum Marketers Association of Nigeria, Mr. Dele Tajuddin. After this break, the conversation continues. This is Business Nigeria. Don't go away.